Hi, everyone. This is Rob Roy of LA Wave Options, and welcome to TradeFinder Live. If this is your first time joining us for TradeFinder, welcome. For those of you live streaming on YouTube, welcome to you as well. If you've seen any of our recordings in the past, you know that before we do anything else, we have to go through this wonderful disclosure/disclaimer. It is important. So if this is by chance the first time you've seen it, please take a screenshot of it, read it in detail at your leisure. A couple of things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. That's important because we have a lot of international viewers. We have a lot of international subscribers. So here's how TradeFinder works. We'll go through and do a bit of a market update. You're probably wondering what's going on with the market with the past couple of days move. We'll do a review of any open and closed LA Wave options trade alerts, give you an idea of how our alert service works. And then we'll go through and do a review of past case study considerations that we found on TradeFinder. And we'll look for some tonight as well. With whatever time's left at the end, we'll do a general Q&A. That usually amounts to you guys asking us about your favorite stock symbol, and we take a look at what our indicators may say about it. So that's it. That's how TradeFinder works. So without further ado, let's go ahead and take a look at the markets. Well, you can see that we've had a couple down days here and some sizable bars. So when you see that, the first thing you want to do, take a look at volume. Is there some volume behind that? Well, there is above average volume, but something that's interesting is you can see it's declining. So as we've moved down in this bit of a correction, the volume is not increasing, it's actually decreasing. So what does that mean? Well, let's take a look at the moving averages, and you can see that, well, we're getting awfully close to that 50-day moving average, which has been the point of support for so many of these small corrective moves that we've had throughout the past year as we've tracked on this upward move. If you've seen any of the recordings that I've done on the SPY on YouTube, you know that we're still in a 1 standard deviation channel in this entire wave 5 pattern. We've had 5 different zigzag patterns throughout this, but all maintaining that 1 standard deviation and the corrective moves coming down just to the 50-day moving average. Now, the last one that occurred back on the 18th of August didn't quite make it to the 50-day moving average. Are we going to make it this time or not? That's the million-dollar question, isn't it? But one thing that's, again, really interesting is the fact that volume is tapering off as we finish the corrective move. So let's take a look at the DMI. Not giving us much of a signal at all. I'm not a big fan of looking at the DMI for downward moves. I really like it for upward moves, and you can see it's kind of a mess. We did have a crossover of the negative directional indicator, but that's running out of steam. So note that the buyers are moving to the downside. So buying pressure is not too strong, but selling pressure is waning, and the ADX is just kind of really not interested. Take a look at the CCI. That's one that's a little more interesting. We just did the CCI in our Indicator Mastery series. If you haven't joined us for that, you can sign up on our website, EWOTrader.com, where we go through, and we're doing it every Wednesday throughout the month of September and taking a look at our favored confirming indicators that create the support system that we use for Elliott Wave in our alert system at LA Wave Options. And we just talked about the CCI, and you can see now it's moving down back towards 0. That's an interesting point that has significance. Again, I invite you to look at that entire session on the CCI. There's a lot of really great things about that indicator, and the fact that we're nearing a point where we found some support, but a few times we've had extreme points that were lower than where we are. So indecisive. So basically where we are right now is we're kind of in an indecisive point. Are we just testing that 50-day moving average again? The declining volume would suggest so. The CCI is not giving us much of an indication of where we go from here. We break 0 and go down to minus 100, then we have a different story. That would be an indication that maybe we break that 50-day moving average this time. We're just not quite there yet. And we're really not getting much of a signal from the DMI. Now, this coming week on our indicator mastery series, we're going to talk about the CMF, Chaikin Money Flow. And you can see that money flow is still positive, but note how that's waned as well. Well, one of the key things with money flow is divergence, and it isn't diverging. The market is going through a little bit of a correction, may turn into more, but so far it's just a little bit of a correction, and the money flow has tapered off a little bit. That brings me to another subject. Is the Federal Reserve secretly starting to taper just a bit? I wouldn't put it past them. I really wouldn't. Well, we're going to find out in the next few days if we break this 50-day moving average. That'll tell us a lot from how things go from this point in time. All right, so let's take a look at a few of the other markets, some of your favorite ones that you've asked for that we view quite often. One is our friends over in Australia, or down in Australia, I should say, with the XJO. And we had talked about, this is kind of interesting here. We had talked about the stair-step pattern on the way up. I don't want to go through and draw all those lines again. Basically, you have a sideways consolidation, a move higher, sideways consolidation, move higher, sideways, and it just continues that way, and you stair-step to the upside. Well, now take a look. Now we've had a move to the downside here and a sideways consolidation, and we've moved lower again. Are we going to do this again to the downside? That's what would be an interesting question to ask in trading the XJO. I think the next few days will tell us a lot along those lines. Do we consolidate? And if we get a lower move, I think that we could really just walk up the stairs and turn around and walk back down them. A lot to go before we can make that call, but look at that DMI. If I was more convinced that the DMI was a great indicator for downward moves, I'd be pretty concerned because the ADX is broken above 20. It's moving down. We do have that negative directional indicator moving lower, but the positive directional indicator is moving lower as well. So that's not giving us too much of a signal. And if we look at the CCI, we're getting to the point where this is an area, and throughout the past 9 months, basically since January, we broke a level that would have been considered support on these extreme points. And we've moved back a little bit to the upside, and we're coming back down to test that. That could indeed act as support for a move back to the upside. But I think this potential sideways move from here warrants attention. But this would be the most positive thing that I could find on the ASX if you're bullish on the Australian market as far as a potential recovery from here and move back to the upside. We look at the money flow here. Now you're getting divergence. So this is when you look for the CMF to give you a signal, especially when some of your other favorite indicators aren't really stepping up. You can see that the money flow is increasing while we've gone sideways to a downward move. So you couple that with the CCI at an unusual extreme point low. I think if you wanted to be bullish, you could make an aggressive move on the ASX and go long from here. Your support level is easy to see. If you break 7,300 here, then you get out. But based on those indicators, it could be an early sign that that's it, and we are going to start to move back to the upside. Remember, we had that 106% wave 5 extension, but it doesn't mean that that's the end of it. But if the end is there, then we're going lower. You can look at last week's recording to see that. I know everybody wants to look at Bitcoin, so let's take a look at that. Just exactly what it's supposed to be doing. So we moved back to the upside. I know Bitcoin trades 24/7. So if you're new or if you're streaming with us on YouTube and you haven't seen us before, I understand that it trades 24/7, but we look at end of day charts. So there has to be a point where it shows the end of day, just like we do with futures, et cetera. And you can see that move back to the upside. We're just going through a consolidation right here, which is really right in tune with all of the different zigzags that we've shown. You can go back and look at our past recordings and see all of them. So we consolidated there at the 100% extension, and now we've come back down and tested the 61.8. That's really classic Elliott wave Fibonacci price action if we are indeed going to make that next move to an extended C wave up to that 55,000 level. And as we've talked about before, if we get up there, I think we probably test this area of congestion here. And if we get that far, likely that we're going to go test the recent highs. So we'll see how that all plays out, but nothing is surprising from an Elliott wave Fibonacci standpoint of what Bitcoin has done. It's doing exactly what it should do following this big move to the upside. Going through consolidation, when you hit one level, then you come back because it's an extended level. We only had a 30% correction, so that's an extended level already at 100%. So before you go to the next extended level, you should retest the previous fib level. That's what we're doing. So we're testing it. Will it hold? Well, today's move looks like it might. So we'll see from there. The Nifty, we talked about this being one of the best looking charts in all of the markets, and it still is. Finally, we're going through a little bit of consolidation here. It's had such a strong move, but this vertical move here needed some consolidation. And the fact that it hasn't pulled back much more than it has, just a little bit of a blip here, is really bullish as far as the Nifty continuing to move to the upside. When you take a look at that DMI, it doesn't get a whole lot better than that. Yeah, we've had a little bit of a drop down in the buying pressure through this sideways consolidation, but really not a whole lot going on with the selling pressure either. So it's not like sellers have really stepped up throughout this point in time. It's just it needed a rest following that big move higher. We could be looking at much higher moves on the Nifty, up maybe near 58, and we're trading at what, 49 is where we close. It's a pretty good move in that index. So it still remains, in my opinion, the best looking index of any of them out there. I do want to look at interest rates. I've talked about this on the past few recordings, and I maintain my view here that what happens with interest rates is going to be a foreteller of what goes on in the markets. And you can see that we've got still a triangle pattern. So we did have a pretty nice symmetrical triangle. We tried to break out and it didn't. But now if we take those lines off, couldn't you say that we basically have morphed that symmetrical triangle into a pretty good looking ascending triangle, where every time it runs up near that 14 level, it hits resistance, bounces down, but each time it's come down, it's been a higher low. But we have a breakout attempt here today. Our subscribers know that one day of a breakout attempt means nothing. We have to have a second day, a follow through, a confirmation day. And at this point, we just have the one breakout. Now, what would the significance be there? Well, we're going to talk about this in the next market update, but a little bit of a break to the downside would give a little boost to the tech sector. Tech sector likes lower rates. That's positive for them. But if we move too much lower, which would likely occur if we have a confirmed downside breakout, you can see we have a 5-wave pattern to the downside here with a really strong wave 4 correction right at the 38.2% level. Look how the 10-year has had trouble getting through that. If we start marching and we get all the way down to that wave 5 low, well, that's an indication of economic weakness. So the issue that we have with interest rates is we're kind of in the sweet spot now, right around here. So you don't want rates to go too much lower. A little lower, okay, that could be good for the tech sector. Techs don't want interest rates to go too much higher, but a little bit higher is positive, meaning that it's likely the economy is improving. Too much lower means the economy is not so good, would be an indication of economic weakness. So you can see that the economy that we have here and how important what happens from here with interest rates really is to where the market moves from here. And that could be why the market not so sure what it wants to do at this point either. So I thought you'd find that pretty interesting. Now, I'm going to hold off looking at the Qs because we'll take a look at that when we go through our case study reviews, because we do have a strangle on the Qs. So we'll take a look at that then. but I will bring up the IWM. That's the other market that I like to bring up and look at, because we've been hoping at some point since this entire year's sideways consolidation here between 210 and 230 that we might eventually get a breakout, and we had that run to 230, and you can see that was it. Just boom, right up against resistance. Here we come back down. Looks like we're going to march down, hit that 210 level. Nothing of significance here. No potential breakout, at least not at this point in time. Put the moving averages on. We've broken below the 10-day moving average. We're about to get a negative cross with the 10-day moving below the 30-day. That's a negative sign. So it looks like what's likely with the small caps, with the Russell, is that we're going to go down and test that 210, that support level. So hoping for some sort of a different area of support. Doesn't seem to be coming to fruition. All right, so let's take a look. I've got a case study here that we did on ODFL, and this one was in our high value portfolio. I thought I would take a minute to share with you what that is. This is, by the way, what our alert screen looks like for our alert subscribers. EWOtrader.com, again, is our website. Every single one of our alerts that gets sent out has a screen just like this with the entry information and the exits. I know there's a lot of alert services out there that only do entries. We do entries, any adjustments, and exits as well. Now, note that on the entry, the cost was $6.50 on one contract. That's $650. Now, normally in our two primary portfolios, which is the impulse and the volatility portfolio, we kind of keep things around $500 of risk or less per alert that goes out. However, some of our subscribers said, well, if we have larger accounts and we wanted to take on more risk, could we do that? Because having $500 or less of risk precludes you from doing like this higher dollar stocks. So putting a strangle on a stock that's trading up at $280, you're not going to be able to get a reasonable delta on the call and the put when it's trading that high. So being able to do that gave us the opportunity to go ahead and put on a straight call here for $6.50. So imagine what a strangle would cost if we did that. So here it's just a straight call. So we were looking for a potential move to the upside around 290, and then the exit was sent out just 11 days later. And you can see that there we go. We're right up there. Now, we didn't quite hit it. And you're like, well, wait a minute, that target move. Well, these are price projections that are done by the software. And if you're interested in the software we're using, it's called Profit Source. And to me, it's the best Elliott Wave software that exists. I've tried all of the Elliott Wave programs that I know to exist, and to me, it's the best. It's programmed exactly to Ralph Nelson Elliott's mathematical algorithm, which is about 20 front and back pages long. You have to be really good at math to understand it. I'm not. I don't really understand what all that stuff means. I just look and get used to the patterns and follow along with that. Well, this wave 5 is a price projection. So we're in a wave 3. As that wave 3 continued higher, the price projection on the wave 5 moved. Originally, it was at 290. Well, we're almost there, and we have a doji on the chart. And we also have the ADX breaking above the positive directional indicator. So with all that information, probably time to go ahead and take our gain. Plus the fact that we spent $650 to get in, closing it out at $780 is still a $130 profit. And it's only a 20% gain, but it's $130 profit considering the fact that it would cost more to get in. So 20% return in 11 days on a higher dollar entry, I think makes an awful lot of sense. So again, every single one of our alerts has this. A trade ID gives you the symbol, what portfolio it's in, the actual trade itself, how many contracts, expiration, and then we have this mark-to-market graph over here, which gives you a daily update of what happens on each and every one of our existing alerts. So we have our troll trade list right here on every one of our open and closed alerts. Everything is listed there. You know where every position stands every single day. We're 100% transparent. We don't hold anything back. So thought you might get a interest out of that if you hadn't seen that before. All right, so let's move back now for those of you that may be just joining us live on YouTube live streaming. We do a case study consideration each week. And so each week we go back and review ones that might consider to be still open. And one of those is Poly. Now, this is an older one. This is back from May. So this has gone through the adjustment process. Initially, we had a nice symmetrical triangle here, and it did break to the downside, as you can see, but it really didn't generate much of a gain. And so then we look for, all right, let's see what's going to happen with this retracement. Elliott wave triangles are going to retrace their breakout. The issue is you don't always know when. It's like filling gaps, and this one did both. It retraced the breakout and filled the gap really quickly. Sometimes those things don't occur quite so fast. It takes a little bit of time. Sometimes they do it immediately, as in this one. And now we're down here testing this area of support. So from here, if we bounce, we're long. But if it starts to break this area, then we'll go short. And you can see that we have support down here around 25, and then stair stepping down from 20, potentially all the way down to filling this gap down here if the market were to weaken. Now, if the market bounces off that 50-day moving average, we're at an obvious level of support here where we could bounce and move higher. Next, we have FND. This one was an alert we found on August 3rd. Now, watch what happened here. So we're in the wave 3, and it's a fairly vertical move, a little bit more vertical than I'm comfortable with on a wave 3. But we went ahead and used it as our case study consideration anyway. And then what happened? Well, when things go vertically up, often they come right back down. This is what happened, created the wave 4 right around a 50% corrective level. And now we're back above where we were when we entered. So this is now profitable. I like to see about a 10% move. So we'll still keep this one as an open position, but following it just needed to create its wave 4. Now it's doing everything that we thought it was going to do and continuing to move higher. So it's higher than where it was when we entered. On the 17th of August, we identified this, and we did send this out as an alert to our subscribers as well. I'm really excited about where we can go with this, and I'll show you that in a minute, because we had this nice ascending triangle on the Qs, and then you can see we had an upside breakout, but we ran up here right into resistance there at 380, and we're starting to break back down. So if the market doesn't hold this area and we break down below that 50-day moving average and start to head lower on the general market and the Qs come back down, we can take the calls off with that additional premium that's in them and let the puts run to the downside. Perhaps we're just creating a zigzag here. So you could look at this zigzag tool and see, yeah, it qualifies. We're corrected right to the 38% level, which means we could extend up to around 390 if we hold here. So that's a point where, all right, well, we have to pay attention to that possibility that we now have a qualified zigzag pattern to the upside. And that's all that first impulse move was, really, is consolidating it. Now we corrected to the first fib level and we could potentially move higher. So that's why I'm saying I'm pretty excited to see what happens here. If we break down, we take the call off and let the put run. If we move back to the upside, well, we already have the call. And so we'll be good to go there. So this is going to be exciting to see which way it goes from here. Then on the 17th of August, we looked at this one, Align Technologies. And you can see that we had broken to the upside and we're kind of back pretty close to where we got in. So a little bit of a movement to the downside here with the weakness in the market the past couple of days, but we're basically where we were when we entered. So we're still in a wave 3. We still have this pattern here of higher lows. And so we'll give it a chance to see if perhaps interest rates do weaken a little bit, and then that sends the tech sector higher. This could get a nice boost from that. We also, on the 31st of August, identified this potential breakout on Camping World. And I've talked about this before. This is Marcus Lemonis. It's his company that does the profit on CNBC. And you can see that looked like we're going to break to the downside. And all we've done is generate a larger triangle. And that's fine, because when you create a larger triangle, quite often that means a larger and more volatile breakout. So still nice symmetrical triangle pattern. Look forward to seeing the breakout occur there. Now the next two, we had Citigroup, and that was last week. And here was a really nice looking symmetrical triangle here, and boom, pretty decent breakdown day that occurred today. You can see that move to the downside, and boy, that's a pretty decent move. And that probably coincides with what happened with interest rates. Now, is that a precursor to the fact that rates are going to break lower? Financials will really struggle in that environment. They're going to have a hard time. So if rates start to go lower, you can expect to see this downward breakout continue, but a really nice start there. And then the other one that we looked at, watch this. Here we had this really nice upward move with a symmetrical triangle on FSLR, and pow, man, that's what you want to see your breakout look like, right? Just a vertical move. They don't always do that. I'll tell you, breakouts can occur in a number of different ways. Often they break out and they run in a 45-degree angle, which that's great normally. But hey, if you have a triangle and you get a vertical breakout, that's the one time when I don't mind it. I said before, normally I don't like it when stocks go vertical because quite often they come back down. But if you're going to go from 94 to 107, that's fine on a nice vertical move there. So I think we'll just go ahead and cross that one off the list. C is looking good. So that one's done. We had identified those two last week. Now, a couple that we talked about, I wanted to show you this. We had looked at BOTZ. Somebody had asked about that, and I really wasn't too familiar with this, but we looked at it and we said, dang, look at that vertical move to the upside here. Need to see that consolidate. And I mentioned that I was going to put it on my watch list, and I did. And we've watched to see what's happened since then. There's your 10-day moving average. So see, this was last week. You can see the separation. There's no way I'm going to chase that. It's just not going to happen, because too often when you get that vertical move, it comes vertically back down. Now, ideally, you would want to see this consolidate sideways if that was a really strong move and had a potential to continue. Well, watch what's happened since last week. It's gone nowhere, dead sideways. That's what you want. Now look, the 10-day moving average is caught up. We're no longer in that overbought condition. So we're watching this really closely, and this could go out as an alert. We're just going to see what the market does. If it breaks below that 50-day moving average, then obviously we'd likely hold off. But if the market shows any sign of strengthening from here, then that will likely go out as an alert. Perfect consolidation. That's textbook. That's what you want to see. All right, now let's take a look at the flip side, right? So not everything goes as planned. And I have my rules that I follow. I've been trading options for 25 years. And, you develop your system of rules that you want to follow over time. Well, one thing that I've been looking at is natural gas. Natural gas has been running like crazy. And look at that. So it's been, vertical, gap up vertical. And right here, I was thinking, okay, if we can just go sideways here and let that 10-day moving average catch up, because if I come back down here, you're not going to see the 10-day moving average there, right? So it's here, like, okay, we go sideways right here. We got to run up to 20. We've got a good chance. Well, it didn't do that. It just has kept going to the upside. So we haven't had that kind of a consolidation yet that we had on BOTZ. That's aggravating, because I've just been watching this to put a position on to the upside, but my discipline will just not allow me to chase something vertical. There's just no way I'm going to do it. If we miss one here and there, I'm willing to do that, because the last thing you want to do is be chasing these vertical moves. A lot of people have done that with the Reddit stuff and the meme stocks, etc. But when you chase those vertical moves, it can come back to bite you, because at some point you're going to get that move back to the downside. Best case scenario is you get the sideways consolidation like we did on bots. Now notice there's a doji today. Is this the time when maybe we have a little bit of a pullback and give ourselves a chance to get in here? I hope so. That would be great. You look at the DMA, it looks fantastic. the DMI looks really good. So you're like, well, if the DMI looked good, why didn't you get in? I just can't do it. I can't chase these vertical moves. And why? Because over the years, you get burned on doing that, and you learn the rules. And that's where rules come from, right? You learn more from mistakes than you do from things that you do right. And so I just can't do it. At some point, it's going to correct. Now, it may go to 21 first and we missed the entire move, but that's the way it goes. That everything doesn't always go 100% according to plan, which is, that's in your own trading. If you're not along an alert service or don't have some sort of a guidance or mentor type thing, when you get into a market like this, what do you do when it's confusing to the point where the market doesn't even know what it wants to do? And that's one of the things that we do every Thursday. We have an insiders meeting. So, tomorrow we're doing education with our indicator mastery. And then Thursday we have a live webinar for our alert subscribers only. And we talk about our open alerts and we let them ask questions. It's very interactive. And so it's a great chance to communicate back and forth, and our subscribers can communicate with each other as well. So I did want to show you this. I've been watching it, missed it so far. We'll see if it's just one that gets away. Is this the one that got away? Or is the fact that we have a doji today an indication that perhaps we get a little bit of a pullback that gives us an entry before that run up to 20 or 21? If we miss it, we miss it. But, I just felt like in the spirit of fairness, I'd go ahead and show you that, hey, we don't get them all right. We do miss some here and there. All right, so now let's go ahead and take a look at seeing if we can find a case study consideration for this week. And talked about the software program, and over here can see where there's a tab that says Elliott Wave Options. Well, the creators of this software, the Hub organization out of Australia, noticed that we're getting an awful lot of Elliott Wave Options people that were getting the software. And obviously that they see me using it, and so they became interested in it. So the folks at Hub decided to create these searches here that if you have the program Profit Source and you're an Elliott Wave Options subscriber, you get these as well. Now, other owners of Profit Source that aren't Elliott Wave Options subscribers don't get these things here. That's why it says Elliott Wave Options there. That's for our alert subscribers only. And these three searches here that say EWO, those are mine. Those are the ones that I've created over the years. And so they're programmed in the pre-computed list. So all you have to do is just go, boom, click on the button and it'll show you. There's two. Look at that. Look what's number one, FND. And we've been in that since the 3rd of August. So that's a pretty good sign that that one's likely to continue to the upside. Again, if the market cooperates. But there you go. So it just needed to create its wave 4, and now it still looks really good. As I mentioned, that it's above where it was when we got in at this point in time, and it's telling you that, hey, it looks good to continue to move to the upside. And then ASML is another one. So we'll take a look at that. Oh my goodness, that's a really expensive one. So this might be another one that goes into our high value portfolio. If you take a look at the DMI, Elliott wave pattern is we're in a pretty extended wave 5, but that's the move I like. That's that 45-degree angle. The reason that I like that is when the corrections come, they tend not to be as severe. We talked about what goes straight up quite often comes straight back down. But when you run up in a 45-degree angle, these corrective moves tend to be more shallow. They don't hurt as much when they come back down. So we got a gap up today. So we have to wonder, is that a blow off top with that gap? It was on pretty decent volume. So it might be. And then you take a look at the ADX and it's up at 40. It's still underneath the positive directional indicator. But when you get that ADX to 40, it's telling you the strongest part of that move is over. As good as that looks, that would be a tough one to enter for me at this point in time, just because that ADX is a bit extended and the gap up is concerning as well. So we put the moving averages on there. We're not really that much overbought. There's not a lot of separation from where it is, but got kind of a quasi doji there. It's a gap up. ADX is at 40. Another one that would be kind of chasing in my mind. Now, with that said, with the stock trading at $888, there's probably a good likelihood that 1,000 is in sight for this one at some point in time. It's one of those big, huge round numbers. From you talk about the tractor beam effect, old Star Trek analogy, where those big numbers just kind of suck the stock along and draw it right to those big numbers. So I do think that we likely go there. I'm just not sure when that occurs, because it does look like perhaps the stock needs a bit of a rest. So that one would be a difficult one as well. We're already in FMD, so we don't need to do anything there. And so we can look here. This is a momentum search, and it shows the lower dollar stocks. We created this as well as something to give some lower dollar stocks a bit of credence with some technical indicator support, rather than just looking for stocks that have a low float and high short interest that you could create a short covering rally. And retail traders aren't strong enough to do that. It takes institutional support to help do that. So this one's getting up towards the extreme level here. Again, if you look at our CCI class from Indicator Mastery, you'll understand what that means. Now the DMI looks really good. That looks very strong. And then the positives here are the fact that we've broken support and we're coming back to test it. Excuse me, resistance. We've broken resistance at 19.5, and we're coming back down to test that level. So we could easily bounce from here, move to the upside. And the CCI is saying, hey, maybe you want to rest a day or two. Maybe we go sideways for another couple days and consolidate this move above resistance. Let that CCI come back down. But the DMI looks awfully good. So an aggressive trade would be to go ahead and try it now with that DMI, understanding that the CCI is at an extreme level. Doesn't mean it can't make a new one. It can go higher, but it's a warning sign that perhaps a little more consolidation is warranted out of the stock before it makes its next move to the upside. And I also don't like this. When you look over here on the scale, it looks like, oh, it moves pretty good. But each one of these blocks is 50 cents. It's not $1 or $5 like we're used to seeing. So if we brought this down to where each one was $1, now all of a sudden you say, oh, yeah, it really doesn't move as much. So it's a scaling thing, right? It looked like it moved a lot more. So let's take a look at this other one, CPLG, see what that looks like. And then perhaps it may make sense to look for another strangle with where the market is anyway, and look for something that's consolidating. Now here you can see this is a different story with the CCI. So here's our extreme points up here, and the CCI is rising, but there's room there. And then you look at the DMI and you can see that, well, the ADX is moving up, but it's not even to 30. So this one, core point lodging, I don't know anything about it, but it has the potential to move back to the upside here. And that's your clear support level right at 14. So if we were to break down, 14 would be a stop. A little concerned about this gap right here. At some point, that's highly likely to get filled. Talk about gaps get filled. Somebody did a study on it. It came out with like 94% of gaps get filled. So there's a high likelihood that that's going to as well. But when? That's the issue, is that we don't know when they're going to get filled. Sometimes they fill immediately. Sometimes it takes time. But that was interesting. Let's take a look and see if we can see what the options look like on CPLG. And there's a lot of them. So spreads, they're not that wide. I can use my little magnifying glass here so you can see it just a little bit bigger. But it doesn't look too bad. So there's December, November. I'm going to take a look at November. See, the spreads aren't wide at all between the bid ask. So the number on the right is the delta, and then you have the bid and the ask between those. So that doesn't look bad at all. That's pretty interesting. So if we wanted to be a bit more aggressive, we could go ahead and and try that, especially with the CCI having some room. So let's make a little bit of a note of that, or perhaps it wasn't one of the searches, but we talked about bots. You guys ask about it. Maybe that should be our case study consideration, with the fact that now it's gone through and done its consolidation. I think that might be fun, right? You guys suggested it last week, and it looks like it wants to move up towards that 41 level. The DMI is a little high, getting up there towards 40. The fact that the positive directional indicator has come down is not really that concerning, because of the fact that it's gone sideways for a week. But this is an aggressive trade too. So do we want to do two aggressive ones in the same week? I'm not sure, but what the heck, let's do it. Obviously knowing that if the market does correct, then so remember, we talked about this, knowing that these are aggressive. If the market corrects, then you take these off right away, because the market needs to consolidate itself to do that. So CPLG and bots are both bullish trades. Well, let's see what happens with those. And I like the fact that this is a one that you guys asked for. So we'll take a look and see what happens. All right, with what time we have left, I'll go ahead and answer some questions. Angelo asked, do I cover the XJO stocks? I don't. I look at the market in general. I used to travel to Australia a lot, and I became pretty familiar with the shares over there, and the ones that were optionable and the ones to look at, etc. But I haven't been to Australia in a while. Kind of miss it there, to be honest with you. So I'm not as up on the individual stocks within the XJO as I was before. So I tend to focus more on just the market itself. Sorry, I can't really give you too much insight. I can look at charts if there's a specific one. We've had people ask about individual stocks over there. I can see what the charts look like, but don't really look at the individual ones. All right, Jeff, we're going to limit you to two. So we'll look at Amazon Thursday night. So we'll do these other two. Fuel cell, FCE, energy has been the market that's been doing well. Fuel cell hasn't been cooperating with that, but the energy sector as a whole has been doing okay. There was your support at 6. It tried to break below it and came back above it today. And on massive, was that an earnings report? I'm not sure what caused that big spike today, but that's a lot of volume that came in with that. But the issue is when you get a volume spike like that, and then you close near the low. So we opened here, we traded much higher, and we closed down near the low. It's not really a bullish signal for that move to continue. It looks more like it gapped up. Perhaps there was some short covering, etc., but then people sold right back into it. So some of the sellers took the opportunity to sell it right back down. So just based on that bar today, perhaps it turns and goes back to the upside. But for me, I would need to see it, that 10-day moving average break above the 30. So that would mean some continuation from this upward move. It did finish to the upside, nearly 15%. So you don't ignore that. But the daily bar just doesn't look that good. And so for me, I'd want to see, all right, can it sustain itself to the point where that 10-day moving average is able to cross above the 30? A lot of people look at that as a bullish signal. That's where I got it from. That's why I have it on the screens looking at it. So for me, just too aggressive dinner right now. We'll see if that occurs. And then USO oil is going to be, kind of along the lines of what we were talking about with natural gas, energy. Anything energy has been doing well. That was that needed to happen, this correction within oil, because it had such a long run. It needed to correct. And it kind of got away from itself here. It looked like, oh, what's going on? We're in free fall. Got too far away from its 10-day moving average, and look what happened. So that works both ways. Not just when stocks get above the 10-day moving average, they get too far below them, then either they're going to bounce back up or go sideways and allow the 10-day moving average to come back down. But either way, no security in any time frame is very far away from the 10-day moving average. Where have you heard that before? Well, if you heard any of my videos, you've heard it a ton of times because I talk about it all the time. because it works and it matters and it's a great rule to follow. So with USO, where we're going here is we're getting back up to an area of congestion, but it's made a nice move. The 10-day has crossed above the 30. DMI isn't giving it any interest at all, though. Look at the ADX has continued to move lower this entire time. It would take a little bit of time for it to reverse, but it should be starting to show signs of turning back to the upside. So that gives me a little bit of pause here on whether or not oil can break through this area here at 50. The DMI is not showing that it can. It's not showing that it's going to have the strength to move through there. So be careful. But on the other side, if you wanted to be, even if you want to be aggressive, I mean, I can't, but not with that DMI, say, okay, an aggressive move would be to go ahead and get in now. I would wait. So you're going to have an aggressive / conservative move here all at once would be if it can get back up above that 51 level. So if it can break 51 and take off, whole different scenario, probably start to get a better looking DMI. But right now you're at resistance, and that area from 50 to 51 is a pretty good ceiling. So I would just kind of have to wait and see, can it break through that 51? If it does, it's probably off to the races. So that would be a good one to have on your own personal watch list and say, hey, if USO breaks above 51, that's a good bullish trade, looking for something to move back to the upside. So when the gambling stocks, this should give us a little bit of an indication of what's going on, because this tends to be a sector that when the economy weakens, money flows here. The viewpoints are the defensive sectors are drinking, smoking, and gambling. So if you have a stock that's anywhere in one of those sectors, they tend to do well, because the viewpoint is that no matter how bad the economy gets, people are going to stop drinking, smoking, and gambling. Those are just vices that we have that we continue to find a way to fund those even when the economy is not going well. But this chart of win is certainly not showing that. It's actually surprisingly weak as far as any sort of a break in this Delta variant and starting to reopen. Things are reopening. This makes it look like maybe it's going to be with us for a while longer. And this wave 4 corrective level is right at a pretty strong fib level. And we've gapped down today, right down to 90. The best hope would be that you get a bounce back up, close that gap, get back up towards that, pardon me, the 10-day moving average. But right now, unless it can break back above 100 and move above that wave 4, it looks really bearish. In fact, this could be a really good downside trade. So what you would want, all right, let's see if it fills that gap. If it goes sideways here where the recent lows were, first, we have a gap right here that needs to get filled. So that could bring the stock all the way down to 80. But can it run down to 80 right now with the fact that it gapped down and there is a little separation with the 10-day moving average? The ideal scenario, and I've talked about this numerous times as well, the market doesn't always give you the ideal scenario, but the ideal scenario would be it moves sideways for a bit here, maybe a little bit of a bounce, even if it went back and tested 100. If it can't break 100, then that's a good downside entry on that one. So not necessarily a bullish move. I'm not sure if the question was looking more for the upside or not. Constantine says, let's look at the diamonds. And, I hadn't been looking at the Dow until you guys started asking about it. I hadn't looked at the Dow in quite a while. I've been pretty laser focused on the S&P and the Qs for quite some time. But the chart looks pretty similar now with what was going on with the Qs and breaking down very similar. Let me get a sip of water here, clear my throat. Sorry, I know that's irritating. All right, so we've had a lot of rain in Florida, so allergies are out in force. Breaking below 350 was not good on the diamonds. Positive would be we still maintain this set of higher lows, barely, precariously holding on to that. But if we get follow through from today's downward move, see, we broke down, no follow through. tested back to 350, broke down again. Do we get a follow through day tomorrow? Not a good thing if that were to occur. Right now, the S&P futures are up 1, so not a whole lot going on, not much of an indication. Really had a lot of potential downside trades ready to go for our subscribers today. In fact, I had several screens open ready to go, but the market held. It looked like it was about to break down to a point where it's going to trigger some short positions, but it didn't. It held and it bounced. We'll see if it can get any follow through tomorrow. But with the diamonds, if we break down from here, then it could get ugly on the Dow from here. So we need to hold this trend line where we have those higher lows. The 10 did cross the 30 today. That's not positive, but we could be coming all the way back down here towards this area. And I know we had 188% extension. So when you look at that, you aren't expecting a retracement back to the previous 4. You're looking for a move back down to the 61.8% level, but that's all the way down here at 321. So tomorrow, extremely important for the Dow. It really needs to close positive, and ideally, if you're long the diamonds, if you're long the Dow, you want it back above 350. Until it gets back above 350, it's hard to be bullish on the diamonds at this point in time. Craig asks, how does the Chaikin Money Flow work with indexes? Well, if you have a cash index like the SPX, obviously you're not going to get a reading because you need something that actually has money flow. So you look at the corresponding ETFs like the SPY, et cetera. But thanks for asking, because we're going to cover a whole hour on it tomorrow night on Chaikin Money Flow. So make sure you tune in if you haven't already. Bitcoin. The Bitcoin software is showing an impulse move that the zigzag is extended. So we'll continue to see if that follows through and continues to the upside. It looks like it might from here. Would I buy on the dip on UNG? I would if it would give us one. It doesn't want to give us one, but if it did, yeah, I've been waiting on an entry for it for a week now, and it just keeps going vertically up and just can't do that. Yeah, as far as an upgrade to profit source, I've seen the beta stuff. It's freaking awesome. So if you have profit source, you're going to be so excited. If you haven't gotten it yet, you need to get it because you want to be first in line when the new version comes out. It is so cool. It's got every bell and whistle you could think of on it. It is really, really neat stuff. James asked if we can look at VCYT. VCYT. It may have been the question on Bitcoin, may have been talking about the fact that a lot of times full impulse patterns start with a zigzag. And the fact that we've had that zigzag pattern could mean that we're in a full impulse back to the upside. I mean, that's what that question was referring to. So taking a look at, because people talk about that all, you talk about zigzags a lot. Well, the reason I do that is they're shorter. They're 3 waves instead of 5. And so I really like zigzags. Not everybody looks at them. People are like, oh, zigzags are corrective patterns. It can be within an impulse. You can have corrective patterns within an impulse. We have triangles all the time that are within impulse patterns. It happens. It's normal. So when you take a look at VCYT, we had a breakout move, couldn't hold it, came back down, didn't even hold 40 here, which was interesting. The fact that it needed to come back down more towards 35. So it got right in this channel here where it had support for quite a while. And now we're trying it again, and we're testing this area now, which it needs to hold. So if you're long this, it needs to hold right here because we broke below the 10-day moving average today. If it breaks down from here, it's probably going all the way right back down to 40 again. So if you're long this, it needs to hold right here. Let's take a look at the DMI. See the positive directional indicator has come back down. Had a good looking wave 3, had some support with the DMI. Some point we need to create a wave 4. So perhaps that's all that's going on. Exactly what FND did. Same exact pattern where you had a really nice wave 3, then you created the wave 4, and we move back up to the wave 5. But I still say that that 4 is projected to be right here. We need to kind of hold right here, label that 4, then you could have a run back to the upside. But regardless, you want to see that hold somewhere in this point in time. So yeah, James was talking about all the things that I just went through with this projection here. They could label that and head back up. Again, you have a model for that. Go back and look at the F&D chart for the exact same thing that could potentially happen. This guy wants to look at V. So Visa. Sorry, didn't change it. I just don't think this is a positive sign economically as well. If the consumer is not spending, then how is that positive from an economic standpoint? We've been talking about on our recordings on the SPY storm clouds for a couple months now of things that are going on in the market. I would add this to the building thunderstorm that will eventually happen in the markets. If it doesn't happen now, at some point in time, it really will. But why are the credit cards moving back to the downside? Why aren't we starting to see a bigger move here? Let's look at MasterCard real quick just to see if it is just a Visa specific thing or if it's more of a sector thing. But a really good wave 4 right there at 50%. Then it tried to bounce. So it looked like, okay, here we go. We just needed to create the wave 4 and we're ready to go to the wave 5, but we couldn't get through resistance at 230. So now we're going to try testing 220 again. Maybe that holds, maybe it turns back, but it's hard to be bullish on Visa until you get back above 230. If it could do that, that would be really good because that's a solid wave 4 there. But if it doesn't hold, then we're probably going down to a 61.8% corrective move. Let's just quickly see what's MasterCard. I thought it was MC. Did they change their symbol? Everybody trades Visa now, but if anybody knows what MasterCard symbol is, tell me. So let's look at Tesla. We'll look at Thursday night. ASAN. And wow, that's a pretty nice breakout move. That's what, I mean, I wish it wasn't so vertical though, right? Other than that, you look at it and say, okay, there's your 45-degree angle. Then you consolidated it sideways. Love that. A little bit of the stair step type of view. But why do we have to go vertical now? If it would have just continued in this mode, I would say we're going right to that 130 level probably before we create the wave 4. But now it's decided it wants to go a bit vertical. We look at the DMI, see the ADX is now up at 40. So we're getting into extended level. That's a hard one to chase too with the vertical nature of the move. A little bit of separation here with the 10-day moving average. And I do want to highlight when things get overbought, they don't stay that way forever, but they can for a period of time. When things go vertically up, often they come vertically back down. But as you saw with UNG, doesn't necessarily tell you when that vertical move is going to end before you get a bit of a correction. And I just would have rather seen this one break in a 45-degree angle rather than breaking vertically to the upside there. Had it broken more 45 degrees, I think I would have been more in tune. So if you're in this, if you're long this, my viewpoint here would be, as long as you stay above 100, you can stay long. That's one of those big round numbers. It's broken above it. Put some separate. Let's see if there was volume today. Above average volume, that looks good. So if you're already long this, I wouldn't get out unless it broke back below 100. If it broke back below 100, I would be concerned that it could give up that entire vertical move and come right back down and test 80 again. But really, that's a pretty strong move. The ADX is warning. Let's see where the CCI is. Well, that's got room. You could turn and go back up towards that extreme point. So yeah, if I was already in this and already long, I wouldn't get out unless it broke back below 100. But if I wasn't already in it, I'd have a hard time getting in right now because it just looks a bit overextended to me. So you want to look at some of the gaming stocks, Boyd Gaming and Penn. Take a look at those. Same thing here. You know, this is football season. This is when this is the best time of the year for gambling stocks. And this is in a wave 5 pattern to the downside. Now that wave 4 is at 75%. So that's pretty much, it didn't quite hit 78.6, but it's awfully darn close to disqualifying this downward pattern. I wouldn't pay too much attention to that Elliott wave pattern here unless we break 55. If we do, then it's gonna be like, all right, it made it by the skin of its teeth. So I would just say it's a little suspect on that wave 4 being that big of a corrective move. But why didn't it hold 60? It should have held 60 when it came back down. So that makes you nervous. Now we're probably coming down to 55 now. What happens when we get there? If it bounces off its support and turns, perhaps we get a relabeling of the Elliott wave pattern. But if it breaks 50, then it's coming to 45. It's going to complete that Elliott wave pattern and come all the way down to 45. So that's a concern there. Penn. So this is another one of the gambling stocks. Same exact pattern. Didn't hold 80 on this one. Why not? Why aren't these stocks holding? So we got credit cards not doing well. We got gambling stocks with the start of football season looking weak. There's a lot of warning signs. And now there's another expression that the market climbs the wall of worry. Well, it's got a lot of worries right now for it to climb. So if it does, then boy, that holds true. But we're going to find out with how we handle that 50-day moving average here very soon. Pankaj asked for SMH. So we're going to go ahead and do that and let that be the end of it. Semiconductors are, a little bit of a bright shining light. I was looking at that earlier today, Pankaj. So looking right in that with you. Now that's positive, right? The semiconductors. So, and as I said, we've had this chip shortage, part shortage. You get the semiconductors moving, then perhaps that can be a good sign economically. But that is a good looking chart, isn't it? I mean, look at that move to the upside through there. You look at the DMA, and it's like, there's no confirmation. How is that possible with that looking so good on the wave 3 when there's no support? So that makes you nervous too. Now there is a little bit of a tick up in the ADX, and we do have separation between the two directional indicators. And we had one of these kisses here. That's when the two directional indicators come together and then move back apart. It looks like they're going to cross, but they don't. They call that a kiss. It happens all the time. And a big mistake that people make is that they assume that's going to cross and they jump into a trade too early. In this case, it would have been a bearish trade, and they kiss and they go back in opposite directions. So the negative's still going down, the positive's going up. So buying pressure is overpowering selling pressure right now. There's no doubt about that. But we need to get that ADX because that is such a sign of strength, that giving it a little more of a sign to the upside. Maybe it does. We're coming off these lows here with the ADX around 12, so it's off that level, but a little bit more of a turn to the upside, and perhaps that could be a sector that leads us out of this mess. But if we lose that, if we lose the semiconductors, then I think that correction that is long overdue, in my opinion, may be in hand. But we've got room to go. So again, scenario, if I was long, there's no reason to get out. But be careful. There's a little bit of support. So if you've been in this trade and you've got a profit in this trade, that's your stop, 270. If you were looking for an entry, if we don't get confirmation out of the DMI yet, then you wouldn't mind seeing a test of 260, see if it comes down there and get an entry. But if you're in it now, I wouldn't get out. But I'd want it to hold 270, and I want to see that ADX kind of come in line, and maybe it will. The two directional indicators are more responsive than the ADX. It lags a bit, but perhaps that could give us a signal, and that would be a healthy sign. So, trying to look at both sides, right? We've looked at a lot of things that are pointing to economic weakness. This could be a sign of economic strength. So as I say each and every week, appreciate you spending your time with us. For those of you that were streaming with us on YouTube, thanks for your time as well. Time is the most valuable thing that we all have, and we appreciate you spending some of it with us. Hope you found tonight's session informative. Look forward to talking to you